All right, here we are. Thank you very much for making time in your busy schedule. I promise you that this will be an excellent opportunity for everyone to learn something new. Good evening, everyone, and welcome to our webinar today. I'm Anchal Dwivedi, Managing Partner at Goldstone Capital Ventures, and I'm joined here by Dinesh Nayak and Shruti Dwivedi, also managing partner at Goldstone Capital Ventures, and guest speaker Corey DeHarsh. We are so excited to introduce Goldstone Capital Ventures that specialize in add value and new construction multifamily deals. Over the years, we have gained significant experience and expertise in identifying and acquiring underperforming assets with potential of significant value add opportunities. Our team of experienced professionals have proven track record of transforming these properties into thriving communities. One notable acquisition in a new development of 184 units luxury apartments in Winston-Salem, North Carolina. This project is currently in a development stage and is set to become one of the premier luxury apartment communities in that area. We have been involved in acquisition of over 11 apartment buildings across Carolinas, Texas, and Florida, and is total of over 1,100 units. In addition to our focus on value add and new construction deals, we are excited to announce that we have upcoming projects in the assisted living as well as the student housing sectors.
Yeah, you may want
to. We have the contacts of the team members here, and the QR code you see. If you can scan with your phone, that will take you to our deal portal where you can sign up and get up-to-date information about our deals and the upcoming deals. These are some of the acquisitions we had last year and this year. This is Ivy Wood Apartment. This is a 96-unit community in Gaffney, South Carolina. This is Sweet Redemption, 44-unit. Short-term rentals in Arlington, Texas. This is right across the Cowboy Stadium in Arlington. Sharpwoods 40 townhouses in Charleston, South Carolina that we just acquired this year. This is Chetland Place, 98 townhouses in Spartanburg, South Carolina, right across BMW manufacturing plant. This is a brand new asset we just acquired last year, December. This is one of our best projects so far. It's the new construction of luxury apartment, 184 units. It's in development stage. This is very close to the Haynes Mall, which is very popular mall in Winston-Salem, North Carolina. So, and from here, I'll pass it on to Shruti.
Okay. Thank you, Anchal. Good evening, everyone. We are really excited to see you all tonight. So thanks for taking time and joining us this evening. So whether you are a seasonal investor or just starting out, we are here to help you to make informed decisions and achieve your financial goals. It's my pleasure to introduce Corey DeHarsh from Advanta IRA. He's here to teach you how simple it is to use the retirement accounts for alternative investments and how this process works. So since 2016, Corey has impacted hundreds of clients by providing diligent and thorough assistance with investment transactions ranging from small, hard money lending to multi-million-dollar syndications. Through his personal experiences and continuing education and networking, he has helped investors and the capital raisers confidently tapping into the self-directed IRA, 401k, HSA, and ESA accounts to diversify their portfolio and increase their passive income growth. Just like to call out one thing, if you guys have any questions during this presentation, then feel free to put your questions in the Q&A, and we will be going over that section at the end of the presentation. Now, without delay, I will pass the presentation on to Corey. Thank you.
Thank you very much for the introduction. I'm going to go ahead and get my screen share up here for everyone. And got that up. If my fellow panelists could just confirm, is my screen up for you guys?
Yeah, got it.
Perfect. Okay. Well, again, I'm Corey Deharsh. I'm here to speak to you guys about self-directed investing, whether that's an IRA or a solo 401k, just to really show you how easy it is to use these type of accounts to make the type of investments that you want to do, as opposed to what your financial advisor or fiduciary is leaning you towards, like stocks, bonds, and mutual funds. As Shruti had referenced, I've been in this industry since 2016. I spent about 5 years as a client account manager with Advanta, where I processed day-to-day investment transactions for my clients. So I have processed on myself thousands of real estate investments, whether it be a syndication or other types of investments in real estate, as well as other asset classes. I've got a wealth of knowledge about self-directed investing. I've had what's known as a CISP designation, or a Certified IRA Services Professional designation, since 2018. And that does require continuing education credits to keep up in good standing as I've progressed through the years in the industry. Advanta IRA has been around in this industry for 20 years now. This is our 20th year in existence. We have about 10,000 active clients and just over 2 billion in assets under management held by our clients. And just in case you're wondering, all funds that are not actively invested in a deal are insured up to FDIC limits. And then something that we do at Advanta, as I just referenced my previous position, we pair each client with a dedicated client account manager. So you have a one-to-one representative and a go-to person. You're not calling a call center or a large wirehouse custodian having to explain exactly what you want to do to the company every single time with a new representative. You have one representative that you get comfortable with and you get familiar with, that knows when you send a call or an email exactly how to assist you and what types of questions you may have. It's very important I express that we do not provide any tax, legal, or financial advice. Again, with a self-directed account, you are controlling the investments you make. So it's completely up to you to do your own due diligence, consult your own team of tax professionals or legal professionals as you decide what investments to make. And again, we're experts in the IRS rules about using these accounts. So we'll happily help you strategize your investment, or if you're working with a team like this, we'll help you get the investment paperwork executed in the name of your retirement account so that all the T's are dotted and the I's are crossed and the investment's properly held in your IRA so there's no tax liability, or your solo 401k for that matter, which we'll get into the difference a little bit later on in the presentation. So what I'm going to cover tonight is what is a self-directed account, how simply they can be used in different plan types and different investment strategies that you can use with them. I'm going to go over how easy it is to fund these types of accounts. It's very simple and typically doesn't even trigger a taxable event or taxable reporting. I'm going to give you a case study and an example of making an investment like you would make with this group, or a few other simple investment strategies, just so you're aware of the opportunities available to you. And then again, I'm going to go ahead and answer your questions as well. So please feel free to add those into the question box. I will be happy to address them all. If you've not heard about self-directed investing, that's perfectly fine and actually really common. Only about 4% of US-based retirement accounts are self-directed right now. And to put that into perspective, there's just around 38 to 39 trillion dollars in US-based retirement accounts. So of that figure, of all the people that have a 401k or an IRA or the other types of plans referenced, like a health savings account or an education savings account, only about 4% of those dollars are being utilized in these strategies. You may be asking, why is that? Why do not people know more about these strategies? Well, if you have a larger fiduciary custodian, your T. Rowe Price, Edward Jones, Merrill Lynch, they again are a fiduciary. So they have a vested interest in only guiding you towards stocks, bonds, and mutual funds that they've done due diligence on and sign off on your ability to invest into. With a truly self-directed account, you can actually control any investment you'd like. The IRS's rules are simply that you cannot invest an IRA into a life insurance policy or a hard to value collectible like antiques, fine wine, artwork, those types of things that are subjective in value. Outside of that, there are a ton of different asset classes you can invest into. Most of our clients are real estate investors, whether they're doing syndication style investments and letting a general partnership team like these guys do the day-to-day work on the investment. And then you just sit back, you put your money into the deal after you've done your due diligence, and you wait for the profits to come hit your retirement account. There are other strategies as I've outlined here, but we're not here to talk about those strategies today. So I just wanted to let you know they exist. If you have other questions about them, that's different research and a different webinar. So the plan types that you can use for self-directed, most people are familiar with your traditional and Roth IRA accounts. There's also SEP, simple, and solo 401k plans for small business owners. As far as advances plans are concerned, those plans are really for you and your spouse if you're running your own small business and do not have any W-2 wage earners in your entity or in your business, and you're paying yourself some sort of self-employment so that you're generating self-employment income tax. The other types of plans, as referenced, are health savings accounts if you are someone that has a high deductible health policy, and education savings accounts if you've got young ones in your life that you'd like to set aside money, and then even self-direct it in this case for their educational expenses, whether that be elementary school, sending them to private school, or along into undergrad and postgraduate degrees later on in life as they progress. So why do people switch over to a self-directed account? Well, first, they have to know that it exists. They have to hear a webinar like this or a podcast or speak to someone that knows about self-direction and can point them in the direction to know about it. And then once that occurs, they realize, oh, I'm already doing syndication investing. This is a new source of capital I can also add into these deals that I really love and really like working with. Some people are getting fatigued with the stock market fluctuation. Over the past 2 to 3 years, I've spoken to countless clients that end up signing up with us to self-direct their retirement funds that just say how disappointed they were, how much money they were losing on the stocks, bonds, and mutual funds held at their fiduciary custodian. And then the tax benefit. When you're using your retirement account to make investments, you're generating either tax deferred or completely tax-free income. It's tax deferred if you're in a traditional style account where you've taken a write-off when you put the money into that account, and then it'll grow tax deferred until you distribute the money in your retirement later on in life. You will have to add that amount that you distribute to your ordinary earned income for the tax filing year you take that money out. If you otherwise have a Roth account, meaning you've paid the taxes at the time you put it into the retirement account, that money will grow completely tax-free moving forward, and you will never have to pay taxes on that money again. So put into perspective, you can put $6,500 or $7,500 aside every year as of right now. If you're under age 50, $6,500, over age 50, $1 extra $1,000. You can either get a tax write-off for that amount right now, and then when that grows into a larger amount and you distribute it later in life, you pay taxes on everything it grows into. Or you do not get the tax write-off now, you put that $6,000 or $6,500 or $7,000, $7,500 aside, and you invest that and never have to pay taxes on a dime that it turns into in the future because you paid the taxes on the initial investment into the retirement account. It's very important to network with your network and invest with people you know. In general, know, like, and trust are terms that I'm sure you've heard of before. But when you're self-directing, again, we as the retirement account custodian are not doing due diligence and not providing any financial guidance for you on the investments you make. So it's very important that you do your due diligence, you make sure you're properly aware of the general partnership team and the plan and prospectus for any investments you go into before you make those investments. So moving the money, a lot of people think, oh, it must be difficult or it must take a lot of time to move money into a self-directed account. Well, it's actually really quick and in most cases really easy, or it's really easy and in most cases really quick. There are 2 key ways that you move money into a self-directed account. If you're going from the same type of account into a new account, so a traditional IRA with a managed company to a self-directed traditional or a Roth to a Roth, that is known as a custodian to custodian transfer. You'll initiate that with the receiving custodian, so the company you want to hold the money, and you basically just fill out their transfer request document, and they submit that along to the current custodian or current holder of your money. And roughly speaking, it's typically accomplished within about 1 week. Without 3 to 5 business days is the standard timeline that you can expect for money to be moved via transfer request. Now, the other option for moving your money is a rollover, often a distribution for rollover from a previous former employer plan is what a lot of people do. So if you have a 401k and you've left an employer, it's very easy to tap into that money and move it to a self-direct account. There is no taxable nature to doing this, but it does generate some tax reporting. For example, if you make a distribution out of a 401k plan, that is reported on Form 1099-R. When you roll that money into a qualified plan within the allotted time frame, which is 60 days, that is reported on Form 5498 to the IRS. And as long as those forms have the same dollar amount, meaning exactly what you rolled out is what you rolled into another qualified plan, there is no taxable event to occur. It's a complete wash from that perspective. And in this case, with a rollover, most times the rollover is done via a check. So there's an additional lead time of a check having to be mailed and then a deposit hold potentially. So does take a little bit longer on average than a transfer request, but it's still typically done within about a week and a half to 2 weeks. A reasonable conservative estimation is about 10 to 14 days for you to complete a rollover transaction. Now, if you're someone that has a current employer 401k, it's likely that you cannot tap into that money until you terminate or leave that employment, but there are exceptions. It's a case-by-case basis, and you'll have to find out from your retirement account administrator. So whatever company your employer's retirement plan is through, if you're eligible to do what's known as an in-service rollover. A lot of times these exceptions are made if you've already reached retirement age, so you're already at age 59, or maybe you've had a long tenure with the company, you've been with that company for 10 or 15 years. Sometimes they have other stipulations. Again, it's a case-by-case basis, depending on the language of your company's retirement plan agreement with whoever is managing that retirement plan. I already kind of alluded to most of the information on this slide here, but prohibited transactions, the only thing the IRS doesn't let you invest into is life insurance policies and hard to value collectibles. Prohibited transactions with disqualified persons is another thing to keep in mind. A disqualified person from you or your retirement account is basically someone that's in your family, your lineal descendants and ascendants. So you're not allowed to invest with those individuals. For example's sake, Dinesh's son cannot invest into an investment that he's a general partner on, typically with his retirement dollars. If Anshul was to buy a piece of property, or as he mentioned earlier, holding the piece of property that's student housing, his son can't live in that student housing. Or if he owns a single family home, his son can't rent that home from him. Or he can't buy a single family home with his retirement dollars from his family member. So those are the types of rules. They're pretty simple. We're experts in that. So as you decide to have a self-directed account, you want to speak with your custodian about the strategies you want to get into. The other thing on this slide here is unrelated business income tax and unrelated debt financed income. Those are little known taxes that may apply in certain investment scenarios. They're typically not the case when you're in a syndication deal as a limited partner. That's more so if you're actually using your retirement account to take out financing, or you're generating active income in your retirement account. Because again, in its nature, these IRAs and 401k plans are supposed to be generating passive income specifically. So with real estate investing, just to hone in on the asset classes, we're talking about single family homes, short-term or long-term for rental or rehab projects, condos, mobile home units, or an entire mobile home park, tax deed and lien investing if you're someone that's just starting out with a small balance and looking to build on a retirement portfolio. And then real estate investment trusts can hold any of the above mentioned asset classes. And then syndications, whether it's a commercial property or multifamily investment, syndication investing is a large portion of our investor base because they just have the money, they've done the due diligence, and they don't want the headache of the day-to-day maintenance of the investments. They'd rather have a strong general partner team that they've done their research and due diligence on handle that day-to-day operation side of things. So a basic case study. This is going to be a case study of, as a retirement account investor, how to make a syndication investment. We've got a scenario here where Abel is an investor that has $50,000 at a managed IRA account. He meets John, who's a syndicator, and they go over the prospectus or private placement memorandum for John's deal. Abel decides he does want to make an investment, and the minimum investment's $50,000. So what he ends up doing is setting up a self-direct account with Advanta, or a self-directed custodian, doing a custodian to custodian transfer to move the money from that previous custodian to the new self-directed account. And we coordinate in this scenario all of that. I would help Abel through the application process. Then once he's assigned a client account manager, that account manager will help Abel approve and execute the subscription documents for the deal. All the while, our back office is making sure that that previous custodian is sending over the funds in a timely manner. We follow up on that to make sure it's all done on the back end. So just how the process works, that account manager coordinates with Abel and John that the investment paperwork is all in the name of the retirement account and not in Abel's personal name, and that his personal social security number is not identified on any of that paperwork. It's all tied through the retirement account and the trust tax ID number for the retirement account, not Abel's social security number. Once we receive the approved copy of all the investment documents, which are 2 simple documents directing Advanta to fund the investment, and Abel's marking the syndication paperwork as read and approved so that he authorizes Advanta to execute on behalf of his retirement account, we execute the transaction, we wire the funds to the syndicator, and then we wait for the investment to start yielding profits. So in this scenario, the syndication pays an 8% preferred distribution to all subscribers. For that $50,000 mark, that breaks down to $4,000 per year. In year 5, the project's refinanced and a lump sum payout is made of $65,000. So in total, there has been $20,000 in yearly preferred distributions, as well as a $15,000 chunk above and beyond the initial $50,000 investment that's returned to Abel after 5 years. I'm going to breeze through this example here and the next one, just because they're not necessarily what we're talking about in the webinar tonight, but they are just case studies of different investment strategies. So this is if you are interested in actually holding a physical piece of real estate in your retirement account, as opposed to investing as a limited partner into a syndication deal. So we've got John, who's got a former employer 401k plan. He's got about $150,000 on it, and he wants to purchase a rental property valued at 100 so that he has some money for rehab work or any type of expenses that come up. So John opens and funds a self-direct account, gets the money rolled over from that former employer 401k plan, submits an offer to buy the property in the name of his retirement account, and goes through the process of getting all the paperwork, again, in the name of the retirement account, hand in hand with his account manager, executed and approved, and to the closing table, so that the closing is done in the name of the IRA, the deed is recorded in the name of the IRA, and the property is then held in the IRA. So all of the cash flow goes in and out of that retirement account directly. So as this individual decides to start renting the property, it's completely up to the individual, the account holder, to set the terms and find the tenant they'd like to rent the property to. All of the cash flow does flow back into the retirement account. So whether you're someone that chooses to have a property manager in place or just manage the property yourself as a de facto property manager, you'll just be responsible for negotiating the terms of the lease, getting that over to Advanta for approval once you've authorized it and found the tenant. And then we handle all of the cash going into the property. And anytime an expense comes out, we handle that as well at your discretion. It's important to know the rules here. Again, with disqualified persons, you and yourself, your spouse, your lineal descendants and ascendants are not allowed to do any sweat equity or manual labor on the property. That does not mean you need to hire a licensed, insured, certified technicians. You can hire your local handyman that you may already be familiar with. It just can't be a disqualified person doing any sweat equity on the property if you own it in your retirement account. Again, expenses are all paid by yourself or a property manager if you choose to employ one. Again, a property manager are going to charge you a simple rate typically and have a holding of reserve before they start sending proceeds back into your retirement account. So keep that in mind. In this strategy, the $100,000 property that was purchased was rented out for $1,250 for 2 years. That generated $30,000 of income. And then the property is sold after 2 years for $150,000. So that makes a $50,000 profit. Again, with it being an investment in a retirement account, there's no capital gains or no specific tax to be paid. So this strategy in the terms of 2 years generated $80,000 of profit that can now be reinvested into any other asset that that client would want. Now, the final case study is called checkbook control. This is a strategy where you use your retirement account to set up an LLC and invest directly into an LLC. At that point, and in that case, you have a bank account in the name of that LLC that's fully funded and owned by your retirement account, and you're the manager of that LLC, and you can go out and make whatever investments you would like. They still have to be within the IRS's rules, so this is a little bit more onus on you to make sure you're not conducting any of those prohibited transactions or dealing with disqualified persons, as I referenced earlier, but you can still contact Advanta and ask questions to make sure you don't run afoul of those rules. But again, we're not a big brother on this LLC, so we don't get to see over your shoulder every little thing that you do. It's on you to make sure that you're protected in the case of any audit in the future. It's a very simple process to set up these LLCs. All you need to do is register the LLC in the state of your choice. You need to go to the IRS's website and get a tax ID number, and you need to provide Advanta a simple operating agreement with a few stipulations that we will outline for you. Basically, it has to be a manager-managed LLC, appointing yourself and anyone else you'd like as the managers. It has to be a member-controlled LLC in the context that the member is your retirement account, and that's it. It's very simple. We help clients through that process all the time. If you're not sure if this is an allowable strategy, there is case law that supports it. There was Mr. Swanson versus the commissioner in 1996, and the tax court memo with Mr. T.L. Ellis in 2013. Those are just legal cases that basically support you are allowed to serve as the manager of your own IRA's LLC. However, you're not allowed to compensate yourself for doing that. So you cannot take a salary or draw any cash out of this. It's all in the interest of your retirement account generating passive income. So you should not be tapping into it until you use those funds in retirement as a distribution out of the account. It's very simple and easy to set up and fund a self-directed account. The application in itself takes most people about 15 to 20 minutes. Getting the money moved over, as I expressed to everyone, only takes a few business days, depending on how and where the funds are coming from. And you could typically start investing. Again, a reasonable expectation is about 10 to 14 days. The shortest timeline is going to be 7 days because the IRS has a right of rescission period where anytime a brand new established retirement account set up, you must wait 7 days before you make your first investment. So for those investors that are ready to go and their funds are already in the account, by that 7th day, we can typically already have you approved with your investment paperwork for your syndication deal so that as soon as the money hits your account and that 7th day has crossed the finish line, we can get the investment funded and get the money wired over to the general partner team for the syndication. If you're interested in more educational content about self-direction, we typically put out 2 webinars a week. We have a podcast called the Alternative Investing Advantage podcast, and we have a lot of blog content as well. So check us out on our website. Go to YouTube/Advanta IRA, and you can find any more educational content you might like. Here's my contact information again. I will turn back over to the rest of my panelists and hosts here so that we can go over any questions that may have come in from the group.
Corey, thank you so much. It was a good, wonderful presentation. If you have any questions, please go ahead and type them in Q&A box. Before we address the questions, I would like to share some exciting news. Let me share my screen here.
So Dinesh, I just stopped sharing. I don't know if that was a factor.
Can you see my screen now?
Yeah.
I can see your screen now.
Okay. So basically, we have a new deal that just went under contract. This is a student housing asset in near Nashville, Tennessee. This was built in 2016, which is basically pretty new, Class A property. and it's located just 0.1 mile, basically walkable distance from the campus, from the Middle Tennessee State University campus. This is a small town called Murfreesboro, pretty close to Nashville. This offers 252 beds of high quality student housing. It's currently, for this academic year, it's 98% occupied, and it's already leased up for the next academic year, which is 23-24, starting from August 2023. It's leased up 96%. So we already achieved more than pro forma rents there. So that's an exciting news. So the another exciting news is we are assuming a loan, which is of fixed interest rate, 4.38%, which is, I say it, I repeat it, 4.38 fixed interest rate. So that is that's an amazing loan for us to assume, especially in this volatile debt environment. So we are excited. We are super excited about this, and our projected returns are like a 2x in the 5 years. I think we can easily achieve that. So being located in the heart of the MTSU community, it provides access to the shops, restaurants, a lot of amenities. And let me show some more pictures here, I think. Yeah, it has a beautiful floor plan. If you look at each unit, this has 4 apartment units, 4 bedrooms actually. With the bedroom, there is a private living room within the single unit. So this is a beautiful, you don't really see in older apartments, student housing apartments. So this is a great unit and a lot of space actually. And there is a washer dryer, and there is a gym equipment here in the building itself. 2 minutes by bike, 1 minute by car, walkable. So we will have a detailed webinar maybe in the next week or so. So you can learn more about this opportunity later. So this you can scan this QR code for getting into our portal and a soft commit on this deal. You can start that. That is already set up. So with that, we can move into Q&A session now. So Corey, do you see this Q&A box?
Yes, Dinesh, I see there are a few questions that look like they're directed to me. I'm happy to address here.
Yeah, please do that. Yeah.
The first one, is it possible to invest with 403B? So 403B plan is typically for someone that is working for the school system or another. It's akin to, or it's very similar to, a 401k plan. We do not offer 403B plans, but if you have a 403B and you've already left that employer, as I mentioned earlier, you can very easily roll over that 403B plan to a self-directed account. My wife, for example, did that. My wife worked in the school system as she was finishing up her graduate degree. And when she finished, me working in this industry, I was able to help her do a rollover out of her previous employer plan with the school system in Florida where we lived at the time into a other account. And we actually did a Roth conversion at that time as well. So we did pay the taxes on that money that were in that plan, so that they're now growing completely to tax-free in a Roth account. So I hope that answered that question. And again, if you are still employed and have that 403B active, then the question to ask your plan administrator is, are you eligible for an in-service rollover? That answer is going to be the differentiating factor of if you can make alternative investments with that money or not at this time. Next question, how liquid are these assets? So the accounts themselves are funded with cash. You typically liquidate positions you have at other custodians and move cash into the self-directed account. So at that point, they're obviously completely liquid. From there, it's a case-by-case basis depending on what assets that the investor chooses. So if you're going to do a Goldstone Capital Ventures investment, that may not be as liquid while they're in that 5-year period. So that's more of a question to deal with your syndicator group if you're going to do a limited partnership investment or any of the other investment classes that I mentioned. You'll really decide that on a case-by-case basis how liquid the actual opportunity that you're investing into may be. The next question here, is there a management fee once transferred to you? The answer is yes. We do have asset management fees. We are very reasonable with our fee agreement. So from our knowledge and understanding and just being in this industry, we are priced pretty competitively in the space. I'm not going to give out the exact numbers on this webinar call, but if you're interested to learn more, you can contact me directly and I'd be happy to share with you our fee agreement. I can tell everyone that our fee agreement in itself is page 4 of our 7-page account application. So as someone's just starting with us and completing their application, they will know every single item we would ever charge you and for whatever reason. And my job as a business development specialist is to make sure you understand that fully and thoroughly so that as you're opening your account, you don't think down the line there's any hidden fees or backdoor fees that are coming up. Everything should be clearly understood at the time you sign up. It's very reasonable charges that we have. And just in general, with most clients that are just doing one active investment, it's really, you're looking at about close to $300 or so per year. The next question I see here, what is the percentage of risk? Again, the risk there is really depending on the investments that you make. And as a self-directed investor, you're doing your own due diligence on those investments. So from Advanta's standpoint and from the standpoint as a self-directed retirement account administrator, I really can't answer a question as to the risk because you're setting that expectation yourself based on the types of assets that you invest into and the types of quantities and different things like that. So it's completely up to you as the account holder to determine your risk tolerance and with the investments you decide to make, where the risk may lie within those. A few other questions have come in since I've been speaking. Let me scroll down real quick. So can distributions, salary drawn, occur post 59.5 years of age as passive income and tax-free? So 59.5 years of age is actually the age where you're allowed to start drawing from a tax-deferred or traditional account without a 10% early withdrawal penalty. That does not mean you have to start taking that money, but it does mean you're at that point allowed to, and you will not get hit with a 10% early withdrawal penalty. Now, as of right now, there's a required minimum distribution age if you have a tax deferred account that is, if I'm not mistaken, at age 72. There is active legislation that may push that up to age 74. But in any event, when you reach that age, the required minimum distribution age, that is when the IRS mandates that you start taking money out of your retirement account. And the amount that you have to take is going to be based on the total value you have in your accounts and the IRS's life expectancy table. You can go to the IRS's website and look up that chart. If you're younger, it may be completely different by the time you reach required minimum distribution age and your required beginning date. But it is a simple chart, a simple calculation to that effect. One other thing that people don't understand with that required minimum distribution, if you have multiple retirement accounts, let's say you keep a managed account and then you diversify and also set up a self-direct account, you're going to get a required minimum distribution total from each custodian that you have. So your self-directed account may say, okay, because of the value of your self-directed account, you have to take $10,000 out as your required minimum distribution. Well, if you're invested into a non-liquid asset, like a 5-year hold syndication deal, you can take that $10,000 value out of your other retirement account that is more liquid or is more easily accessible for you to distribute from. As long as you satisfy the total required amounts across all of your retirement accounts that you hold, it does not matter where you pull the money from specifically. So that's something that I deal with a lot when I'm helping people. Just understand that you can pull the money from wherever, as long as you accomplish the total that the IRS has set forth as your required minimum distribution total across all of your accounts. Next question here. My employer offers self-directed investing through the 401k. How is the Advanta account different from that? That's a great question. So when your employer offers something that's a self-directed product, you really should look into it a little bit further. In most cases, what they are offering for you and the fact that they're using the term self-directed is really just a list of portfolio assets that they've already done due diligence on and they're comfortable with you investing into. So it's not like they're telling you, oh, we're investing you into Apple or Google or whatever specific items there are. They may give you a list and let you self-choose from that list. But that is not a truly self-directed account like Advantage IRA offers. With our accounts, you can invest into anything you would like, any asset, again, as long as it's not a life insurance policy or a hard to value collectible. So for that individual, I would say, go back to your employer, learn more about that self-directed option. It is likely that it's just a list of asset options that you can choose from. But if you say, hey, I want to invest into Goldstone Capital Ventures opportunity, it's likely that they're going to say that's not what we mean when we tell you self-direction. Unfortunately, I hate to be the bearer of bad news in that scenario, but that's probably the case. The next one is actually listed here as a question for Dinesh. It says, what is the reason of investing in Class A property in Tennessee? The blogs on your website suggest that Class A offers you the lowest returns. Dinesh, if you want to answer that, or if you want me to pass up, you can answer that offline. It's up to you, obviously.
Yeah, I can. And when we look at properties, we see what's the upside. If there is generally in Class A properties, there won't be any upside. You cannot really renovate much and add value to the property. But in this case, since the distance to the campus and the features, the amenities, we can easily raise the rents without even adding any value, without any renovation, no capex needed. So that's why, and also the debt, just looking at the fixed rate debt, we jumped on this. So this seems to be a really good deal for us.
Yeah, and hey, we are also attaining a performer rent already. It's 90%, 96% pre-lease for next year. So that's considered a very good property because we are already hitting a performer rents this year for next year.
Yeah, it turned out to be a no-brainer for us. So, all right.
I would definitely say it was a beautiful property as well. I know when I was in college, I lived in student housing very similar to that near my university. And a benefit to having a nice student housing unit like that, and also being a college student, is that that's an expense that you don't want to live in a dumpy or a trashy unit when you're in college. And you also likely have access to student loan money as a student. So they tend to have a little bit more flexibility in spending the money to have a nice place to live. So I think that you guys are going to do well in having highly rented units in that building for sure. Back on track with the questions. What is the minimum amount for investment to start with? From Advanta's side, we don't have a minimum or a maximum on our end for our account holders. We deal with people that are just starting their first retirement account with their very first annual contribution, or a solo 401k plan, just starting to set aside money from their small business that they're getting started. So I've seen clients start an account with a deposit of $500 every 2 or 3 months based on their earnings. And I've also seen clients move over millions of dollars into accounts with us to self-direct. It does not matter to us. We don't make any different amount of money, or our fees don't change based on a client with $10 or a client with 10 million. Our fees and our costs are based off of the total assets that you hold, the quantity of assets that you hold, or the total amount you have in your account. Again, that's part of our fee agreement that I'd be happy to share with anyone interested. You just have to reach out to me offline for a copy of that or for that discussion. Can you park? Sorry, Anshul, go ahead.
No, what I was saying is, in addition to that, every deal has a minimum investment in it. So it all depends on what is offered. Is a 50K minimum or 75K or 100K? It's deal specific also.
Yeah, from that standpoint, thank you for bringing that up because I really only answered from the IRA standpoint. Yeah, when you're looking at limited partnership investments, there's going to be an investment minimum that's set based on the deal. So that's something that you would look into with Goldstone Capital Ventures or with whatever firm that you're comparing. They're going to have a minimum set. Usually 50 is that threshold, sometimes 100. Sometimes for smaller deals, 25 may be the amount. So it's a case by case basis depending on the deal you're prospecting. Can you park funds in stocks while you wait to put in real estate? So the answer is yes. You can certainly park funds in stocks while you wait. There's a few different strategies that you can utilize to do that. In general, Advanta IRA does not directly hold stocks, bonds, and mutual funds, which are traditional style of assets. So that's something where you may have a diversification tool where you have an account with a managed custodian, and you just can quickly, once you have a self-directed account set up as well, do a custodian to custodian transfer to move the funds within a very short time frame, as long as you know the funding deadline for your syndication investment or any investments you want to make. And there's also strategies where you can hold those types of investments within your Advanta account, mainly utilizing that checkbook control. My third case study I gave you guys earlier today to set up a brokerage account in the name of the LLC that your retirement account owns and go ahead and park them into stocks through that entity. But again, my job is to help speak with you, strategize with you what that looks like, and make sure you understand the ability and the functionality to make that happen. Next question here. Sometimes it could be just that self-directed versus self-managed vernacular. I think that was a callback to the individual that said they had a 401k plan that offers self-direction. I think that was what that, again, this is anonymous attendee, so I'm assuming that's what it was referring back to. Next one says, question for Dinesh, but then it just says you, and maybe they accidentally hit enter before they finish typing their question. And that looks like it's the last one there. So if you guys want to wait for any further questions that come in, or I see we're right at 8:54, 8:55, I'm happy to stay on for a few more minutes if anyone else has questions, or if you guys have anything you'd like to ask me directly as well.
Yeah, Pramod, I answered the question already in the Q&A box.
Corey, if you can touch very briefly about the timeline, right? Someone has a 401k from a former employee, and they want to transfer and redirect it to the self-directed IRA. What is the timeline looks like?
So the timeline, it's pretty quick. They can have their first conversation with me so I can get a grip of what they're trying to accomplish. If they're working with a team like you guys, I would also speak with you and make sure we're all on the same page as we move forward. That individual would complete an application, and that application takes most people 15 minutes, 20 minutes to sit down and complete it. It's very simple. It asks very basic questions and very basic information. So from the time I get the application completed, I will have the account open in 1 or 2 business days. Very quick turnaround for that. That starts a 7-day clock. Again, as I referenced a few moments ago, the IRS's right of rescission period. So in those first 7 days, if we already know the deal that this investor is going to invest into, I will coordinate, and my account management colleague, once the account's open, will coordinate the subscription documents from the syndicator group to be read and approved by the client. Typically, we'll get that done in a day or 2. So we're still looking at maybe the 3rd or 4th day after the account's open, already having the investment paperwork in line and approved, having submit the request for the funds if it's a custodian to custodian transfer, or as Anshul just said, if this person's rolling over from a previous employer plan, I will let them know when I'm opening their account, hey, this is the time you need to execute the distribution request for rollover with your previous employer plan. Likely they're going to cut a check and mail a check. So there's a lead time there that you have to have a reasonable expectation for. If that check is going to be mailed via USPS, that's completely different than if they offer you the ability to expedite the mailing with a UPS or a FedEx label. Once we receive the check, at least at Advanta's end, we do have a 10 calendar day deposit hold. So from the day we receive the check, the client receives an email notification that it's been placed on deposit. We can make the investment the 10th day after that check was deposited, because obviously that 7-day right of rescission period is already cleared by then. So we'll be good to go. And it's a really simple process. If the funds were received via a custodian to custodian transfer within those first 7 days, we really just process the investment transaction on that 7th day. And if it's someone, just to answer this as well, that already has an active account with us, whether they have money in the account or not, we can get the transfer request submit if we need to move more money in to make the investment transaction, or if the money's already in the account sitting idle, like we maybe referenced earlier with someone's question. It basically takes about 2 to 3 business days from the day you tell your account manager you want to execute an investment transaction till they're able to get your approval, have all the documents executed, and fund that investment transaction. So you're looking at maybe 2 to 3 business days. If you bring that up to us on a Monday, we'll certainly get it done by Wednesday, Thursday, no later than the end of that week. As long as you're responsive in approving the paperwork, the syndicator groups provided the paperwork, it's a really quick turnaround time. I see another, maybe a question or two came in. I usually use directed IRA, all of my IRAs in one account and liquidate them for investments. We cannot use current 401k, unfortunately. So I think that was someone just referencing their use case and how they utilize their accounts. Directed IRA is a company that I know of in the industry. If you're using them and happy with them, that's great. If for any reason you're not, I'd be happy to speak with that person, just see what we do different from them and if that's of interest to them at all. Not trying to poach any clients, just saying if you were mentioning it just out of context or out of interest to learn more, that's perfectly fine. Someone asked, and I think I saw this earlier, maybe you guys have already answered it through the chat. Can you please share a spreadsheet to start with before coming to you? If that's asking about your guys' spreadsheet or your guys' information on the deals, that's in its own question. If that's asking about my fee agreement, I at least need to have someone email me to receive that information. I can send you the application packet and or the fee agreement. And I know you guys asked me ahead of time as well. I'm very happy to share my slides from tonight's presentation with anyone. I know I've shared them with the Goldstone team, so you could reach out to myself or to the Goldstone team, and we'll be able to share you a PDF copy of my slide deck if you're interested. What is the percentage of existing 401k amount that can be invested? 100%. You can self-direct all of your retirement dollars if you want to. You do not have to invest all of your retirement dollars. Obviously, you can use this as a diversification tool, but there's no limit or maximum or minimum for how much you utilize in a self-directed strategy. That's completely up to you to do the self-directing of your retirement dollars if you choose to. Are there any initial account setup cost fees? Yes, we do have an application fee. It's very modest and reasonable. If you're interested to find out what that exact dollar amount is, please let me know. Again, with this being a recorded session, I don't want to say the specific number just on the call. I'm happy to share it with you one-to-one, just in case someone's watching this 5 years down the road and that number may have changed. I don't believe it would or will. Our fees have been pretty stable and have not really changed at all. In the 7 years I've been with the company, the fee agreement really hasn't changed much at all.
Yeah, Corey, if you want to leave your contact information, you can share that slide if you want.
And,
Yep.
we'll be sending. We'll be sending the recording and all the contents resources to all the attendees. Give us a couple of days, or maybe by tomorrow.
Okay. Well, I'll just say it out loud for those that are still attending live that may want to write it down. My direct phone number, this is a phone number that rings straight through to me. It's 727-223-3046. That is my direct line with Advanta IRA. My email address is cdaharsh, CDAHARSH @Advanta IRA. You could also find me on LinkedIn or on Facebook if you're interested. That'll be Corey Deharsh and then CISP or Certified IRA Services Professional. Excuse me. That's going to be my LinkedIn page, and I have a professional Facebook page as well, separate from my one that I never check for family and stuff like that. So you can feel free to check on those if you don't want to see pictures of my son and my dogs.
just have one last question, Corey, for you.
Sure. Sorry, I didn't see that. Can I
Yeah.
schedule an auto pay or auto deposit kind of setup to have monthly or quarterly deposits for such kind of investments? So I'm not sure that I'm interpreting that question properly, so I'm actually going to answer it two different ways. If you have an investment, let's say like an investment into Goldstone's latest deal, they would actually be able to set up automatic disbursements at their rate or at whatever's agreed upon in the deal, as my case study one had, whatever preferred distributions, that would flow directly back into your retirement account. Typically, that's done with an ACH or a check. You'll, as a client of Evanta, receive an automatic email notification when those deposits are made. We also have an online login portal. You can always look at your account and see when those deposits have been made. If you're talking about an auto deposit into your account as far as new contributions or moving money in to get an account funded, you can certainly set that up yourself as well. All we really need from that end is a deposit coupon and notice from you that you're going to be setting something like that up. And you really facilitate that with your financial institution. We would generate for you either ACH instructions or wire instructions with your account information so that your financial institution can send those funds in. That's the same thing we would do with any investments you make. We provide your investment provider, when we fund the investment transaction, those funding instructions so they can remit money back into your retirement account. So hopefully either of the ways I answered that question, it covered what you're intending to ask.
Okay. I think that's it. Corey, thank you so much. That was a lot of information, very useful. And yeah, and thanks to everyone for attending this. I know it's a busy evening for everybody. We are trying to catch up to the deadline, tax deadline of April 18th too. So I know how busy people are. So thanks everyone.
Yeah, I appreciate you guys for having me on, for letting me share my knowledge in the self-directed investing space. Hopefully everyone that's participated tonight or is watching a recording of this at least learned something new about this opportunity and about the possibilities of self-directed investing. If I can help you any further, please reach out. I really love sharing what I do and passing on my knowledge to help people, whether they're my age, they're older than me, they're younger than me. Anything that increases your financial literacy and your future nest egg is something that I think I've done a job well done to know that I've impacted people positively in that manner. So very thankful for you guys for giving me this platform and opportunity. And I hope your audience here walks away better suited and having a better mind for what's options are out there.
Thanks, Corey. It's always great listening to you.
Thank you, Corey, and thank you, everybody. And once we have the recording ready, we will share the recording and the slide deck with you all. Good night.
Good night. Bye.